Alright, we are live and recording. Today is Sunday, the 20th? No, the 21st of April. Wow, and this is going to be my weekly outlook. The first one we're doing on Sunday, and we'll see where this goes. But before we get started, I want you to look at this screen. It is 6:30 p.m. on Sunday, like I said, and everything is green, and green in the big way, except for um, what is it, oil futures or whatever. Don't really care about that. But what I'm really looking at right now is the S&P mini futures, the Nasdaq minis, the Dow Jones minis, the Russell minis. Everything is up, and they're up in a pretty big freaking way. And that's important because when we spoke on Friday, when I ended the week, I told you guys they're gonna run this market. Everybody had short-sighted bias as of the close on what's it called, Thursday. We got a lot of chop, leaving people with an impression that, well, I mean, you can't see it on the daily look here, but we got a lot of chop here in these 2 days, leaving people thinking that there's another move down coming. And in actuality, there really isn't much more of a move unless we are going to transition into a bear market. Now that's entirely possible, but what you need to keep an eye on, and what I've quickly drawn, obviously this isn't as accurate as it needs to be or as it should be, but this is just a quick look of what this market's done. I mean, this is the new year right here, guys. The middle of the screen right here. This is January 1st. This is when we had that huge gap up on the fiscal cliff news, and we've literally just ran ever since. And shocking, maybe, but it happened, and it's happening, and this is what they want to do. I mean, this is the plan. You have these crazy, weird Green Day. Well, this one was the Pomo, and then yesterday, or not yesterday, Friday, they chopped it. But they don't expect much out of character behavior, and I really don't. But what I do like about this is the volatility. I mean, look at these big, thick bars, and we're getting them pretty frequently. We're getting what we want. We're getting the movements. I mean, if you look back to October, we'll go October 10. We were getting crazy movements, crazy everything, and then it kind of stalled out with the news, and now we're right back. I mean, these dojis. Look at how many dojis there are on the screen right now. Hanging men, all that bullshit. We don't really want that. We want these full candles. These candles are good. They give us direction. They give us the plays that we want. Those Netflix puts, the LinkedIn, Amazon was huge. Priceline, the Google fucking earnings play was retardedly great. But this is what we're looking for, and this is what we're going to get for a while. So now let's get into it. SPY went pretty much exactly how we expected it to. Hit that target I had of, what was it, 145 or 154.5, something like that, and it just blasted through it, and then it got a ramp job at the end, but that was good. As far as Monday, well, not Monday, but it's more of like a weekly outlook, like what I'm looking at for the week here. I like it, and I like it long, obviously, and I like it in a pretty big way. I want to see it get to this. If you can see right here, this is my Keltner channel midline. So that's at, we'll say, 126.25 or 156.25. Excuse me. Hold on, I got a text message. All right, 120 or 156.25. That would be my first target for the SPY. 156.25. I'm writing this all down so I can tweet it out for those of you who don't want to be proactive and watch this. But what that means is this VIX will get hammered, but I don't even care about that. There's no volatility there. What I want to look at right now, and this is for any of you that are ballsy enough to play this Netflix earnings. I don't advise it, but I did it last time, and I got burnt because I got emotional. What I want you to see, and this is what I'm looking at right now, okay? I want you to look at this cluster of days right here. I'll even I'll draw a little trend line box around it for you so that you see it. This little cluster of days right here, okay? And this cluster of days right here. Now, they report tomorrow, Monday, the 21st, I believe. Right? Yeah, the 21st. Okay. Now, I'm a big patterns guy. I love my patterns. I'm a full, wholehearted believer in patterns. So if we want to play the pattern would be to get long on the morning dip and play the bullishness. People are going to try and carry for the day. You got a ton of shorts. Netflix is one of those stocks that's got a shitload of shorts. Always. And they could get burnt again. I mean, look at this. You got, really, realistically, you have a full week of downward action. A full week. That, I mean, look at that. That's crazy. But you have it. With that being said, we all know that these contracts, especially Netflix with the volatility, are going to have a crap load of premium. So what do? And that's really, look at this already. Look at this shit. All fucking ready. Look at it. Even the 190s, those are like 20, 30 bucks, no, $27 out of the money, and they're going off for $4. Look at that. Incredible. There's really no great way to play it, unfortunately. And that's the real reality that we're stuck with. And I wouldn't suggest playing it. If you're going to play it, I would play any strangle. Realistically, probably 135s on the put side and 195 on the call side. Even that, like, that seems like a suicide mission to me. I personally, if I was a market maker on this, I would just hold it flat and not give it any move. This earnings report could be priced in already, which is like everybody's worst fear. But from what I'm seeing, we need a bounce. I mean, I got to be honest. This should give us a bounce. But then again, we have a incredible amount of selling lately. People are getting out before earnings. Everybody's afraid that Icon got out, or whatever the hell his name is. I don't know, I can't say, but this is a dangerous play. I would tread lightly. Typically with Netflix, and this is a part of Netflix that I personally really, really like, is that even when there is an earnings play, you're going to get a follow-up. You're going to get a secondary move. And this actually, I missed this part. Okay, I got burnt right here when it gapped up. I got burnt for a couple, I think it was 100 and some odd contracts on the put side. And then right here, when it opened up, I bought in on the morning dip when people were selling off. I bought in pretty substantially, and I wrote it out to right here. I caught the high of the day I got out and recouped and profited everything I had lost. But if you go back, Netflix earnings, gaps down, weirdly, but then it ran. It's not a good example, but you're going to get the follow through. Look at this. Gaps down, huge gap down for what it was, and you got the follow through. So if you're going to try and play the earnings on something like Netflix, I would suggest sitting out the actual earnings report and then trying to play the next day volatility in whatever direction they gap it up in. I mean, or down. It could do a Google where they gap it up huge in post-market or after-market hours, and then in the morning it opens up basically flat, almost goes negative, and then they rip it again, and you'll get all of that. You'll get the calls for freaking pennies on the dollar and all that, and you'll be great. God, if I were to make a target for Netflix right now, and I don't expect it to be right, like I said, I would play the 195s on the call side and the 135s on the put side. So I guess those are my two targets depending on how earnings goes. Not really a great target or call rather, but it is what it is. And this Netflix, or not Netflix, Amazon, it's another one. It's got earnings on Monday? No, like Wednesday or whatever. This would be a good long for me right now, but again, premium's gonna be through the fucking roof. You're not gonna get much burn on it. Yeah, again, already you're getting jacked up premium, although it's not as bad as Netflix, which I'm happy to see. With that being said, I personally I'm bullish this Amazon for earnings. I think it did better than expected in Christmas sales. I think it's done pretty well of late. I personally spent almost $1,000 buying books, so that should definitely bump earnings a little bit. My target, it doesn't have earnings till the end of the week, so I think it's going to get a run. My first target would be 260. 266. I know the other day I said 264, but I'm feeling a lot ballsier today after a nice weekend of sleeping and such. This LinkedIn, poor Lucci. Lucci got burnt on this pretty bad compared to what he could have walked away with. For those of you who don't know, that's at Sang Lucci on Twitter. He is a giant herb, but that's another story. I'm really bullish or bearish this stock. I see a move way into the 160s, and in all honesty, that could be on earnings. I would not doubt it. I'd not be shocked or surprised by that. I think that is what we are working with right now. Accumulation is just flat. They sold it off, but I personally would not be shocked to see this rip into earnings. Again, this is another one that doesn't have earnings till next month. I think it's going to hit a low of 173s, but then I expect to bounce back to the 179, 180s. So we'll write that down. But that's that, and I think the overall market might help it. I think a lot of people got short on this candle here, only because the market was running, and this kind of shat its pants a lot, actually. Apple, this poor fucking Apple. I gotta believe that an Apple earnings is already priced in. I have to believe that. Now, there's two ways you can look at it. You can look at it as Google beat and Google ripped, therefore Apple will not beat and Apple will sink. Or you can look at it as Google beat, Google ripped because of other aspects of their business model aside from the phones and all of that. But like I said, I mean, I don't really know how much further this could go down. It's fucking Apple. So for this, at least, I would probably want to take the long side of this earnings play, even though that probably has an incredible amount of inherent risk. And if I was going to do it, I would probably want to play the 405s. I'm not even going to put a target out on that because it's Apple and we'll see what happens, but keep an eye on those 405s. If you see anything crazy, that might be your clue. Google. I don't really know what else you can say about Google at this point. I mean, is it going to go back over 800? Yeah, probably. I think with the SPY doing some upward running, I think you got to assume that this Google is going to go back over 800 and probably hit this upper band here, which is shooting drastically. And I'm going to even go out and say it's going to hit both. So my target would be 817. So 817 on the Google. 817. McDonald's got hammered. Priceline. This Priceline play was a fucking $1 million play. Priceline doesn't report for a while, and Priceline's looking overly bearish right now. Or bullish, rather, excuse me. Is the move lower done? I think it might be. But for the sake of argument, I think I want to call this to 697. PCLN to 697. For those of you who didn't watch the first video, but it didn't matter because it didn't have audio, this might look really bad right now, but right about, I mean, the move lower should be done. It should bottom out and bounce back up. But we'll see. This one I'm kind of sketchy about. Truth be told. Oh, it's in a very nice little uptrend there. Didn't break these highs. I think they might be saving that for summer. I think summertime it gets a lot of Momo due to travel season and stuff like that. What are we gonna do next? Don't really care. Goldman Sachs, of course I care. Goldman lagged. And this is the fractal pattern I was talking about with the lower lows, and then it bounced a little bit. I think Goldman's due. I'm gonna actually hold. I put up a weird target on Goldman. What was it? Thursday to Wednesday. I said 143, and I'm actually gonna hold that target for this, and say that's my target for this week as well, 143, only because I think that's pretty attainable with the market. After that, 145 would be nice, but we'll take it one step at a time. IBM got smashed out. Nobody saw that. And I think we got another bad day coming for IBM. It will do lower lows, break into the 180s deeper, but I'm not gonna take a look at that for now. Sam I am with green eggs and ham. This needs to come down. This will probably, in all likelihood, break this high tomorrow, most likely. It's not a very liquid stock. Doesn't take a lot to really push it. So it's not one that's really great to play for anything. And they only have the freaking monthlies, which is ironic. So this isn't even worth playing until they start killing premium on this, at which point it'll be a decent play, in all honesty. Chipotle. Let's see. Last time Chipotle. Does Chipotle usually? Chipotle usually gets follow through, which I like to see. With that being said, I think in all likelihood you have to expect a little bit of a down day on Monday, unless the market's just ripping, at which point you'll see a nasty little squeeze. What you see in pre-market action will probably dictate what they do throughout the day. If it's just ripping, the play's probably over, and I would look to get short. If it's kind of bouncing around, you're seeing some decent buys or whatever, then I definitely would like to get long that. Soda's got another down day before it bounces again. Actually, no, maybe not. If I was going to do an upside target, it'd be like 52.05 for Soda. 52.05. That's that, but I think this has more room to go down. With that being said, 48.60. I like that. I like the downside more than I like the upside at this point. But we'll see. Herbalife. Ooh. Ooh, ooh, ooh. They report on the last day of the month. Interesting. Oh, the second to last day of the month. 4/29, so that's in a week or whatever. For this, I would definitely go long. I don't think there's much more room to the downside, and the risk factor is definitely in your favor at this point. Visa, it's just going to follow the market, so I like this long as well. Target would be 166. And I think it's got room to go deeper after that. After it breaks this 165 and change, it's got a ton of room. It's been trading pretty much in parity with the SPY, which I like. And it's been incredibly volatile and then given some pretty nice returns, if I remember correctly. Oh, yeah. Look at this. See this right here. This, I like the 170s. These 170 calls for this week coming expiration. These theoretically should open up around 10 or 12. But those might be a nice hold for the week if this SPY wants to just keep going. I really like that. That's yummy. And then Budweiser, I'm bullish. I actually think this might break this high. If the market's ripping like I expect it to be, would not be shocked to see this high fall and fall in a big way. But for the sake of argument, I don't expect a crazy move, so we're not really going to come up with a target on that. Just remember, if it breaks the high, you heard it here first. If not, you didn't hear shit. And that's really all I want to talk about. Well, actually, no. There was one more thing. With regards to earnings, sometimes the play is not to play earnings and to just wait till the next day or the day after the next day, so 2 days after the earnings report, to play it. That's more than likely what I'm going to do. I'm probably going to do a lot of my focusing on stocks that don't have earnings this week, only because the premium is jacked through the roof and makes life miserable for options traders who like returns. I'm a big fan of hundreds of 100% returns. As we saw last week, we had Netflix go off for like 1,300%. We had Amazon go off for fucking God knows how much that was. That was like 400% intraday. We had LinkedIn go off for 300% on that intraday bounce on the 175s from 20 cents to 90 some odd cents. And then we had that Priceline play from 725 all the way to, what did that go to? That went to like 650, I think. Now I'm gonna have to look because I'm curious. No, it didn't go to 650. It went to a low of, all right, so 680 we'll say on the nose just to sound good, but we had that and that went off fucking monstrous. That was like a 1000% return. So we've been calling it pretty good. Earnings throws a huge wrench into everything, always. That's just the nature of the beast. So tread carefully, tread lightly, and if you don't see a defined play with earnings, whether it's like with Netflix, I've been seeing huge 25,000 shares before the markets open. After the markets close, I've been seeing them go off. I saw a couple 10, 15,000s go off during the day. That kind of clues me in that somebody's expecting something pretty big to happen and they're expecting a huge bullish move. I didn't see any volume on the tape or the stock in general to really make me think that somebody is unloading those shares. I've only been seeing them since last Monday, so we haven't had crazy volume. And usually when somebody's trying to dump those 25K shares, lots, you'll see abnormal volume because they'll try and hide it. So people don't realize that they're selling off or whatever. I haven't seen that, which tells me that someone is planning something rather large. So whether it's a move this week, or it can't even be a move this week, earnings is tomorrow. So somebody's expecting earnings to beat and beat in a pretty big way because I estimate they have a couple 100,000 shares that they've acquired over the last week and a half. But we'll see. And that's really all I got for you guys today. Moral of the story is don't play earnings unless you have steel cojones. And I'll put up everything on Twitter, Options Trader NJ, and I will see you guys on Monday. Goodbye.